Hey everyone, welcome to the May episode of the Jeff Trapp podcast, where we break down how business owners actually build wealth and stop giving more money to the IRS than they legally have to. Today's episode, it's a big one because most business owners don't have a tax problem. They have a data problem. And that one issue is costing them tens of thousands, sometimes hundreds of thousands of dollars every single year. Because if you don't know your numbers, you can't plan your taxes. And if you're not planning, you're just paying. So here's the reality. Most business owners think that they kind of know their numbers. They know revenue. They might know profit just loosely, but they don't have clean financials, accurate categorization, real visibility into what actually is happening. And that's where everything starts to fall apart because tax strategy is not something you do in March or April. It's something that you build throughout the year. And if your numbers are off, well, your strategy is crap. I was talking to a construction business owner last week and I asked him what he was using to track his numbers. And he said, Google Sheets, not QuickBooks, not real accounting software, spreadsheets. And then he told me something else, which blew my mind. For every job he takes on, he opens a separate bank account just to keep track of the money. Think about that. Multiple bank accounts just to stay organized. That's not a system. That's a workaround. And look, this isn't rare. What that tells me immediately is no real accounting system, no job costing structure, no clean visibility. It's all manual. It's all reactive. It's all fragmented. And when your business runs like that, there is zero chance you're doing real tax planning. Zero. So what happens? End of the year rolls around, you hand everything to your CPA, they clean it up as best they can. And then here's your tax bill. No strategy, no optimization, just you earn the money, pay this. And here's where it gets dangerous. Sometimes it's not really that obvious. We had another client that came to us and on the surface, they looked dialed in. They had a bookkeeper, they had QuickBooks Online, they had a balance sheet and a profit and loss statement, all the financial statements. So they thought, hey, we're good. But when we actually dug into the numbers, we found over $200,000 to legitimate business expenses. And those had been categorized as owner's draws, which means they were never deducted. From a tax perspective, those expenses did not exist. So they paid taxes on money they never actually kept. That's painful. So what did we do? We went line by line, cleaned everything up, sat down with the client and recategorized it properly. Then we amended the returns and got them a $74,000 refund back from the IRS. $74,000. That's not a small miss. That's a system problem. And now their financials are clean. Their numbers actually mean something. Now we can plan. Now we can strategize. Now we can control the outcome. So look at both of those examples. One business owner, total chaos. Another one, they thought they had it all dialed in. Different situations, same result. They were overpaying in taxes and probably didn't even realize it. And this is where people get it twisted. They think, I've got a bookkeeper. I'm good. No, bookkeeping is data entry. Accounting is interpretation. Tax planning is strategy. Those are three completely different things. And most business owners are paying for the first one and expecting the last two. And if you're waiting till the end of the year to figure this out, well, shoot, you've already lost because at that point, the income is earned, the decisions are made, the tax liability is locked in. There is no strategy left. You're not planning, you're just reporting. At that point, you're basically writing a check to the IRS and saying, hey, I hope I didn't miss anything. And well, a lot of times you did. This is where high income earners outgrow their CPA, not because the CPA is bad, but because they're built for compliance, not strategy. And once you start making real money, that gap gets really, really expensive. So if you're taking one thing away from this episode, it's this: your tax bill is not decided in April. It's the result of everything that happened the 12 months before. And if your numbers aren't clean, if your systems aren't right, if no one actually is looking at your data strategically, you are overpaid, whether you realize it or not. Because at the end of the day, bad data doesn't just create confusion. It creates tax bills that shouldn't exist. Now, if you're listening to this, you're not 100% confident in your numbers, or if you've never had someone actually dig in and review your financials the right way, that's step one. because until that's fixed, nothing else matters. So if you need a second opinion and want us to take a look, you can hop down into the show notes and book a complimentary consultation with our team. And once again, I'm Jeff Trapp with the Jeff Trapp Podcast, and I appreciate you tuning in, and we'll see you next month for our next episode. Have a great one. Bye-bye.